Hello and welcome to Blockchain Silver, the place where we analyze what in the world is going on in crypto. Today we're going to talk about Elliot Wave Theory. Warning, I'm not a financial advisor. This video is for fun and entertainment purposes only. It is best to do your own due diligence, form your own conclusions, and invest based on your opinion of the market. Cryptocurrency markets are highly speculative and may lose value. Be safe out there. So I pulled this from, it was written by JL Trader on September 12th, 2015. Paul Tudor Jones and Elliot Wave Theory. If you don't know Paul Tudor Jones, just Google him. He's a multi-billionaire trader. He's been trading since, I don't know, I think maybe the 80s, 1980s or so. He's quoted in a book, Market Wizards, and I won't go through this whole thing, but he says right here, the reason he has been so successful is that the Elliott Wave Theory allows one to create incredibly favorable risk-reward opportunities. That is the same reason I attribute a lot of my own success to the Elliott Wave approach. So Paul Tudor Jones is quoted as using Elliott Wave Theory, and so are some of the other major traders as well. They look at it and use it. And so here's my thoughts on Elliott Wave. I use it as a windsock to the general market. Just like how a windsock will give you an idea of which direction the wind is going. It works the same way in markets with Elliott Wave. It's just use it as a windsock. It'll give you a general direction of the market. For me, it works better in longer term trends. I'm definitely not a minute or hourly or day trader. I'm more of a weekly and monthly trader. And for me, it works better in the longer term. Elliott Wave, it'll always be a theory because the free market can buy and sell at any given time. Fear or panic can strike a market and everybody can sell and things can go down farther than what's stated in Elliott Wave. Elliott Wave, it can break its rules, I've noticed sometimes. And so it'll always remain a theory. It'll never be proven true. But that's okay. We're just using it as a windsock to the general market anyways. And so also with this, it'll never be 100% accurate. It'll be close, but it'll never be 100% spot on. There will be slight variations with Elliott Wave. This is what I've noticed. And that's because of the free market. The public can come rushing in at the very last minute and buy it, and they can prop things up even higher. And also to the downside, they can sell and get scared, and they can push it down even farther than what it was supposed to go to. And so that's another reason why. But on the good note, it can help you to time market tops. Elliott Wave can give you an idea when you're getting into market tops, both short and long term. And price and time are the key elements in Elliott Wave. Like a wave 1 and a 2, I look at the percentage move and the time, and then I apply that to the 3 and the 4 and the 5. And so this is what Elliott Wave looks like. It is an impulse wave up, corrective down, impulse up, corrective down, and then a final impulse up with an ABC correction, or also a wave 1, 2, 3, 4, and 5 with an ABC correction. There are some rules. The ABC generally shouldn't be any longer than 61.8% of the time of the 1 through 5. And I have the rules here. And so you start at your base price, whatever it is, $1, $100, 1,000, 10,000. And you start at your base price and you look for a top. And this can be anything. This can be a couple of weeks, couple of months, couple of years, whatever, and then that gives you an idea on the wave 2. And so generally a wave 2 can be 50 to 61% of the wave A, so it can retrace. If something goes from, let's just say 10 cents to 20 cents, it can go all the way back down to 15 cents, 15, 16, 17 cents. And so I'm using these numbers because I'm going to show you in a few slides here, basic attention token. We're going to look at it. It followed wave theory almost perfectly. And so then from there, it does a similar move. The wave 3 can be a similar move from wave 2. And from there, same thing. You can have about another 50, anywhere from 30, 20, 30, 40% correction on a 3 or 4, which it would just be the opposite of these. And so this would be the same thing, a wave 5. You could have another, but generally what it is let's just say I've simplified Elliot Wave for myself. I make it a lot easier. I just do a wave 1 equals X, wave 2 equals X, wave 3, and you times it. And so if wave 1, or the base price, let's just say was 10 cents, we go to 20, that's a 2.0 X move. And then from 1 to 2, that can be like a 0.8 or a 0.7 move. So then you just take the base and you times it by 2.0. Take that number, times that by 0.8. Take this number, times that by a 2.0. You arrive here. Take this number, times that by a 0.7 or 0.8. Kind of gives you an idea, if this hasn't happened yet, where you're going to arrive at. It doesn't mean that you'll arrive there. It's giving you an idea. And then same thing for 5. You take the number 4, times that by a 2.0. And it gives you an idea of where you're going to arrive at. And so that's, instead of me using this, I'll show you a little later on here how I've simplified it for myself to give me an idea of what I think a particular asset is going to do. And so with Elliot Wave, you could have 3 different traders that think they're in 3 different time frames, and every single one of them can be correct. And so to give you an example, right here, a short-term trader could say, right now we're in a wave 5, and that same trader could say we're in a wave 3, and a longer-term trader could say, no, we're in a wave 1. So you could have one person saying a 5, a 3, and a 1. Every single one of them could be correct, because Elliot Wave has longer waves that exist inside of smaller waves. And so this same wave here would be a 1, 2, 3, 4, 5 with an ABC correction, making a longer 1 and a 2. Then that same whole market move existing 3 times with an ABC correction is a longer 1, 2, 3, 4, and 5 with an ABC correction, creating an even longer 1 and 2 with an ABC correction inside of that wave 2. And then that would even be, you could even add a 4th, even longer term trader that could say that that's a brand new 1 and 2 with an ABC lasting inside of the 2. And it just goes on. And until you arrive to an ultimate top in a grand super cycle, meaning multi-century, and then that would be the end. Once you get to a wave 5 of a grand super cycle, then that would be a long ABC correction lasting, who knows, it could be multi-decades. It could be the wave 2 of a grand super cycle, the ABC correction of a grand super cycle. If the grand super cycle is 1 or 2 centuries, then let's just say 150 years times 0.618, then the whole, if this right here was 150 years, this here could be like 90 years long. And so this here, sub-minuets, is the smallest. It lasts in minutes. Minuet is hours, days, weeks and weeks to months. And so I fit probably somewhere in between the primary and intermediate to even minor, but I do also look at the large, grander scale of things. And so that's just a little bit. This is really just a super condensed version of Elliot Wave. There's much more to it. But in order for me to keep this video down to maybe 15 or 20 minutes, we're going to condense all of this down. And so here we've got, this is basic attention token, and I picked this one because it did extremely well for Elliot Wave. And I looked at it and I got in on some of the Wave 5 on this. And so here we go. It starts at 10 cents, goes to 21, and the time frames are down here if you want to look at them for reference. Goes down to $1.85. I'm sorry, 18.5 cents. Then goes to 32. Then it corrects down to about 26 and some change. Then makes a final Wave 5 to about 50 cents. And so instead of me doing the 161% for Wave 3 and 261%, I come up with, this is my own calculation. I just look at Wave 1 and say, okay, this was a 2.1x move. Wave 2 was a 0.88. So now I'm expecting Wave 3 to be something similar, but not exact. And so Wave 3 ended up being a 1.73x move. And then Wave 4 being a 0.8125 corrective wave down. So you just take these tops and times it by the next one in the sequence. And then Wave 5, you would take the 0.26, times it by the 1.92, and we arrive at the, it was about 49 or 50 cents. I think some exchanges even had 51 cents. And so this makes Elliot Wave, for me, it makes it way easier. Now, BAT token had a longer than normal corrective ABC wave down. I actually cut some of it off because it was so long that it made this really tiny, and you couldn't see the detail. And it went BAT, let's take a quick look what it went back down to. This is BAT token here. And so to look, yeah, it ended up going back down, all the way back down to in the middle. Normally it's not even supposed to go down past the 1. And so that's where I was getting at before. And it normally in price, it shouldn't go under the 1, and in time, it shouldn't be longer than what the 1 through 5 was. But in this situation, it was. And so that's where I was getting at with, it'll always be a theory, and it's never 100% accurate, but it does just give you, it gives you it's a general windsock to the market. But this here played out perfectly, and I've seen Elliot Wave in the crypto market. I've watched it play out over and over and over and over again, and it generally delivers pretty good results, and you can use it, but you just have to have a good idea of where you think you're at, and you have to be accurate. You have to be more than, I don't know, I'm just guessing 70 or 80% accurate, and so that's why I think the longer term works better. The sub-minuet and minuet, for me, it's never really worked. And so that gets you into an over-trading pattern. And you don't want to be an over-trader. You want to trade in a, what's the word I'm looking for? You want to trade, you don't want to over-trade, so you just want to be a general market timer of price and time. So I guess I don't really know what I'm trying to say is the opposite of being an overtrader. And I have, in time, been overtrading where you're just trading too much, and that's what you don't want to do. And so where are we at in Bitcoin? Well, this is where I think we're at. The 3122, if we apply Elliot Wave to it, that we haven't seen this bottom. I don't think we're going to see it with the Bitcoin halving being only, 6.8, 6.9 months away from today. And today is it's Friday, October 25th, 2019. I don't believe we're going to see this bottom again. Could we see Bitcoin go lower? Yeah, certainly. It definitely could. And so this here was a 6.5 month wave 1. This here, the wave 2 lasting about 4 months. It could last another month. It could go past. We are approaching the 0.618 time of what the wave 1 was. And if we look here, oh yeah, they don't give us the time on this. This is just the price, but it's generally, this should only be 0.618% of the time. Same with the ABC. It should only be 0.618 of this time. But with Bitcoin, we're pretty much at it right now, but it could go on a little longer. It could go down a little farther. We just gotta wait for this to finish. But once it does, this whole move from here to here was a 4.434x move. And so now this coming down, we take this price and we times it by 0.54, and that's where we've arrived. And so could it go lower? Yes, it could go down to 7,000. We could just touch 6,500 for a day, then go sideways, and then the new wave 3 begins. But one of these days, just know that wave 3 is going to begin. This melancholy with the market is going to get over. Wave 3 is going to begin, and we're going to take off from there. Now, if you take whatever this price ends up being, let's just say it touches, I don't know, what would $7,000 be? We times that by maybe a 4.3. That gets us at 30,000. If 7,500 was the low and we times that by 4.3, that gets us at about $32,000 on the next wave. And so now these are just price. These are not time. For me, price and time are key elements. They work together. It would never, ever be where, so if this is 6.5 months and this is 4, a wave 3 is not going to be 1 year long, and it's also not going to be 2 weeks long. It's gonna coincide. It's gonna vibe with what the wave 1 was. But generally, a 3 is a little shorter than a 1, and a 5 is generally like lightning compared to a 1. A 1 is usually the slowest. And so I've put the question marks because we don't really know what this is going to be on price, and we don't know what it's going to be on time. But if this was 6.5 months, then I'm sure whenever this gets over with, if it's in November, it ends, then we're probably looking at maybe 3 or 4 months for the wave 3. And so that's just an idea. But let's say this was over, that would be what? No, let's say it's over sometime in November. If it's beginning, middle of November, then we would be looking at, if we looked at 3 months, that would be to middle of December, middle of January, middle of February. I would be looking at a wave 3 being over. Maybe it could even go into March. And then I see wave 4 being really quick because the halving is close. So it's definitely not going to go on for 4 or 5 months. It's probably going to be maybe a month. It'll be quick. And then I see a final wave 5 leading us up into May or June. And so if March is the top of a wave 3, then maybe 2 weeks down, 3 weeks down, 4 weeks down, something like that. That would bring us into April, and then May and June, and that being about it. And so That's where I see Bitcoin at today. If we apply Elliot Wave, and you can fit smaller waves inside of here, a 1, a 2, a 3, a 4, and a 5. And this smaller one will generally give you an idea as well if you calculate out the days on the 5 versus the days on the 3 versus the days on the 1. Same thing with the 2 and the 4, the days on the 2, the days on the 4, and then calculate the whole thing. It can kind of give you a pretty good accurate idea of where it's going to go and the time. It won't be 100% on, but it'll be close. And so that's where I see us at today. And so I hope that this video helped you. It's a lot of information. Elliot Wave, there's books and books and books on Elliot Wave. There's a lot of stuff to it, but this is a pretty good condensed version of it. And so we apply it. I use it on a lot of different cryptos. Generally stuff in the top 10, top 20. I do venture out every now and then, but for the most part, I stay in the top 10. I don't really look at much past that. And so that's it for today. If you liked the video, feel free to like, share, comment, and subscribe. I want to thank you for coming over to Blockchain Silver, and remember to stay safe out there.